Fantastic. Welcome to Crypto Opportunities 24th of August. As it happens, a very pivotal moment in the markets right now. Exciting times. I've got some things that I'll discuss in the room, but I might just share this in this recording for those that don't always make it to the meetings. But it looks like we're in a massive pivot in the market. When I mean pivot, I don't mean just the short-term pivot. I mean the market that we've been in since 2009 has ended. Yep, that market trend, super trend, and it looks to me like we might just be going into a super bear trend into 2034. Markets won't always feel like that because you'll have bounces like 40% up. So at the end of the day, it doesn't mean much to a trader, but to the economy, to folks with day jobs that aren't traders, etc., who don't understand how these things work, these are going to be tough times for them, and they can't just reach into the market and see the pivot, and so they'll be caught the wrong side in their 401ks and all those good things that are happening out there. They'll do what they've done since 2009, and of course, what they may not understand is essentially November last year that changed. And yeah, we're not in the same kind of super trend market. Of course, the lower time frames take time, or the higher time frames take time to catch up to that idea. And that's why so many people get caught out and think, buy the dip, when in fact you should be shorting the dip. That's just something I wanted to share. We've shared recordings, I mean this one. And of course, Saturday, can you believe it? It's the end of the month Crypto Opportunity session that we have at the end of each month. And of course, we always pick it, don't we? We always have a Crypto Opportunities meeting. It's always one of these electrifying weeks as we go into into the Crypto Opportunities month end. Yeah, by design. Always exciting, always pivotal, but sometimes, when you're in a bear market, it's just a different way to trade the same theme. We're in a very different place. So I'm going to cover a topic of interest on Saturday you might like, something nothing to do with the markets per se, technical and trading it, but something very much to do with Ethereum and the crypto market. And it's basically a nice how-to, and then we'll just cover some stuff. And then Monday, there won't be a meeting. That's Monday, the 28th of August, per se, because I'm basically going to do a sesh on Saturday and record it for those that weren't able to see it, and that will be available Monday. So we'll give everyone a chance to catch up, and then I'll pick it up again on Tuesday. So that's kind of the agenda for Crypto Opportunities moving forward. Of course, we've got a lot of pivots. We need to change, don't we? We need to change with the times. We need to change with the markets. And just because you did something yesteryear a certain way doesn't mean it's going to work today. And that's kind of where we need to be, on the edge of things, cutting edge. But also, we've got the challenge of making money and profits within these changes that happen all the time. So without further ado, let me talk to you about chart patterns. Everyone's seen this basically little idea here of chart patterns cheat sheet, and I know I'm probably going to lose about a couple of folks who rolled out already because they think they know what I'm about to say, but really this is Crypto Opportunities, and this is Taz speaking. Are you sure you know what I'm going to say? Stick around. So yeah, this is the standard chart pattern cheat sheet, that 9,000 out of 9,000 have got access to. So how about let's get a little bit advanced about market patterns, and let's take it from kindergarten into, say, graduate school. How about that? Does that sound exciting, folks in the room? Yeah, as in, let's get down into the dirt, roll up the sleeves, and take a look at market patterns. Are you ready? I'm not hearing everybody because they think this is just a boring topic. Yep, maybe, maybe not. Stick around. Remember, you might have heard something before, but you might not have heard something before. So here you go. So basically, how often do perfect patterns form on price charts? Well, it depends on the chart itself, but usually not often. So what's the solution for increasing the trade signals? What do you think the solution is for increasing your trade signals? Trade in different time frames. I told you things would get advanced. If you did boot camp, that was more novice, where we said stick to one time frame. But in order to see patterns, trade signals, you need to trade different time frames. Trade multiple securities and instruments, crypto markets, futures, the S&P 500. Why? Well, of course, it's some eye training, isn't it? And it gives you a feel for what is a pattern, what is going to work, etc., etc. So here in this example, you can actually see a textbook, beautiful little head and shoulders pattern. But of course, that equally is a head and shoulders pattern. Okay, depending where you take it from. You could have taken this as the left arm, including this, by the way. No, not this one. In fact, some folks would have, because of course the neckline, it may or may not make sense. In this case, of course, it won't, simply because you're not forming a correct, call it neckline. Okay, but you could say that this over here, because of this neckline, this is actually a complex head and shoulders. And so, just demonstrating the fact that it doesn't look like this on a chart. So let's get practical. Trade in different time frames is basically my suggestion. Okay, so trade the daily and weekly patterns. All right, I know there's a lot of intraday traders out there, but this is the thing I want to make a little bit clearer, perhaps. This is what I've found in my trading life. Patterns in intraday charts is not a thing, simply because you're scalping, for profit on price movement, the lower down in a time chart that you go. You're not exactly sitting there looking for patterns like a head and shoulders, etc., etc. Very seldom will you find it. So trade in different time frames, again, is my suggestion. Trade the daily and the weekly patterns. Intraday charts are more prone to failure, and especially with not so liquid instruments. Okay, they're prone to manipulation. There appears one obstacle when switching between daily and weekly, though, and you need to know about this. So let me help you. The obstacle is the ability to decide the significance of a pattern on daily and weekly patterns. What is significant duration? In other words, you ask yourself. You see, that's a little bit more advanced. What is significant duration? Well, my solution for this goes with number of candles on a price chart. Okay, so the solution is to go with number of candles on a price chart. That's how specific I like to be. Load 1 year of data on your daily scale. Okay, plus minus 250 candles, in other words. And load 5 years of data on a weekly scale, plus minus 250 candles. That way, the pattern you see on a price chart will be the same length in candles, but on different time frames. This will make the visual exercise easier for you. I'm going to say that again. Load 1 year of data on your daily time scale. That's plus minus 250 candles. And load 5 years of data on a weekly scale. That's also plus minus 250 candles. That way, the pattern you see on a price chart will be the same length in candles, but on different time frames. Okay, and that will make visual exercise, or the call it the exercise of trying to see the pattern a little bit easier for you. So trade multiple securities and instruments, as we said. For those who have the time and resources to go through hundreds of charts, yes, that's what I do. It's the best way to increase trade signals through chart pattern identification. Okay, so when I apply this approach, I keep in mind the correlated nature of markets. You've probably guessed in the meetings in crypto opportunities, I always talk about correlated, correlation and the correlated nature of the markets. And looking, and that's why I look at multiple charts to see what's actually impacting Bitcoin and Ethereum and the greater crypto market. If anything, you kind of want to see what's going to give you the lift or be the truck that smashes you lower. Okay. So I first identify the pattern on a chart, then I look at the name of the instrument. Okay. So flicking through charts. Or you could basically have a different kind of system where you found interesting dark pool prints. In other words, not just flicking through, pull up a bunch of charts, and I do it like that as well. And during this process, I basically shortlist all the good looking patterns. Okay, so not only do I want to look at a chart just because of levels and prints, etc., but that's what I do. I basically then start shortlisting. So every morning I'll come sit in front of those charts, and I'll start writing up. There'll be loads of interesting prints or loads of different things, but it doesn't mean they're all tradable at the time I'm looking for them. So what I'm looking for is the setups. And then basically in the second stage, I dig deeper. And if I realize correlated trade ideas, okay, I make sure I take note of those as well. All right. So that's basically how I came up with some weird and wonderful trades. Well, why FSLR and why PayPal and this one and that way? Because I'll find a correlation that's interesting and that I want to trade. And that's what I'll do. Obviously, you'll see in the room that I took out a number of trades, but very low. So it'll be one or two contracts, extremely low value in dollar. Work the trade, and those ones didn't work out for a number of reasons. Of course, we're pivoting now in the opposite direction. Stop loss hit, in other words, levels, Fibonacci plus pivots. A number of things didn't look good for those. Get out quickly, preserve the capital at 32% down on a low number like $40 contract. But then in say PayPal, take a 80% profit, and that was fully scaled. So that was a full position. And of course, then you can take multiple of those 32% losses at, a buck, so sizing, in other words, and then your fully scaled idea is making you the profit. So you can have 32% losses on paper, 180% profit, and be hugely up in that kind of picture, just because you've been scaling the size of the trade over time, and the correlation and the trade kind of works out for you. Okay, so that's what I do. Again, I'll say it. I first identify patterns on the chart, then I look at the name of the instrument, and that's just part of training. I span different time frames, but predominantly weekly and daily. And for my purposes of swing trading and positional trading, I will look at the 4 hour and maybe one, but that's it. I don't go lower than that at all. It doesn't help me in the way I trade. And like I said, if you are trading lower charts, then looking for patterns like this is pretty much beside the point. It's too much noise, too much manipulation, and patterns are eradicated fairly quickly. So, as in trying to trade a pattern in a 5 minute is not, it's not the strategy you'd be deploying. That's why we would go level to level, etc. And we're using price movement when it's 5 minutes only. Okay. And basically, happy trading. Hopefully that kind of helped you just in that topic, trying to identify patterns. I just wanted to give you the overview of the process more than things you've already been taught or learnt about patterns. Hopefully there was something in there that kind of was an eye opener for you. Enjoy. That was just a icebreaker for the day, and maybe a nice piece to have in the education pack for you. Have a great trading day, and catch you in the room. Lots of alerts. Don't forget, Saturday is Cryptopportunities Saturday. That is the 27th of August. And Friday, of course, is Women's Equality Day. That's right, it is a national Remembrance Day, international probably. And to all the ladies out there, happy Equality Day. And like I said, who wants to be equal to a man when you can do things that we can't? But have a great day anyway. Speak to you soon. Bye from me.